Morning, everyone. This is the Vermont House Committee on Commerce and Economic Development. It is Friday, April 4th, 2025 at 10:17 in the afternoon, in the morning. We have our legislative counsel with us, Rick Sagal, who is going to walk us through H317. Good morning, Rick.
Good morning. I'm going to pull up my screen here. As I'm doing that, H317, I'm going to kind of give a broad overview and then get into the specifics here. Generally speaking, what this bill attempts to do is a merchant that's swiping a credit card, you pay for, let's say, a restaurant. The merchant pays various interchange fees. And those can be 2%, 3%, right? It depends on the agreement with the bank and the type of credit card you have. So what this bill would do is kind of exempt taxes and gratuities from the interchange fee. So if you went to a restaurant and the bill was $100, let's say, and let's say 10 of those, let's say 20 of those dollars were taxes and gratuity, only $80 would be subject to the interchange fee. And the $20 would be not. So that 20 would be to the merchant free and clear of any interchange fees. Does that make sense in general? That's okay. So the bill, as you know by now, sometimes is not as clear what we're doing because the language can be kind of complicated, but I wanted to give you that as a backdrop before I talk about the details. So H317, we are in Title IX, which is the consumer protection area. And I put it here because we have another statute related to credit card fees and merchants. And, you know, are merchants consumers? In this case, I think they are because they're the ones that you are trying to protect here as far as this bill is concerned. Okay, definitions. We define acquirer bank as a member of a payment card network that contracts with a merchant either directly or indirectly through a processor for the settlement of an electronic payment transaction. And that transaction is that's the swipe, right? I'm not a technical person as far as that's concerned, but when you swipe your credit card, a lot of entities are involved in that. There's a lot of entities involved in ensuring there's funds, ensuring that the credit card is not a fraudulent transaction. Right. So these definitions are mostly covering the entities involved in that transaction. An electronic payment transaction or a transaction means a transaction in which a person uses a debit card, credit card, or other payment code or device issued through a payment card network to debit a deposit account or use a line of credit, whether authorization is based on a signature, personal identification number, or other means. Gratuity is a voluntary monetary contribution received by a merchant from a guest, patron, or customer for services rendered, and an automatic service fee received by a merchant from a guest, patron, or customer for services rendered that is intended to replace the need for a voluntary monetary contribution. So some places have automatic gratuity if it's a certain size of a party, or if it's up to the merchant, they can determine if they want that gratuity to be automatic. Interchange fee means a fee established, charged, or received by a payment card network for the purpose of compensating the issuer for its involvement in the transaction. Issuer means the person who issues a credit card or debit card. Merchant is any person that collects and remits a tax. So that's very broad. That includes a big business, small business, a person that just is a person offering goods or services that collects or remits a tax. 7, a payment card network means an entity that directly or through licensed members, processors, or agents provides the proprietary services, infrastructure, and software that route information and data to facilitate transaction authorization, clearance, and settlement, and that merchants are required to access in order to accept a specific brand of general purpose credit cards, charge cards, debit cards, or starred value cards as payment for goods and services. And finally, processor. This is not a data processor, so let's try to, that's something to keep in mind here. It's an entity that facilitates services, processes, or manages a debit card or credit card authorization, billing, transfer, payment procedures, or settlement with respect to an electronic payment transaction. Any questions about the definitions? Okay, here's the requirements. So when there's a transaction involving a merchant and subject to restrictions I'll get to in a second, no issuer, payment card network, acquirer, bank, or processor shall charge or collect from a merchant an interchange fee on the amount of the transaction that is a tax or gratuity. So we haven't defined tax in this. We've defined gratuity earlier. My thought was tax is fairly obvious. It's something you pay to the state, to the town. It is a government fee that a merchant would pay, be it sales tax or otherwise. 2A, these are the restrictions. A merchant shall transmit the amount of a transaction that is tax and gratuity to the acquirer, bank, payment card network issuer, or any designee of the foregoing as part of the transaction's authorization or settlement process. So I think ideally, practically, the way this would work is you have the point of sale system where you enter in the whatever the transaction amount is, and the merchant would be able to indicate how much of that transaction is tax and gratuity. And that would be the way the merchant would signify to these banking entities that this amount should not be charged the interchange fee, right? B, a bank card network issuer or designee that does not receive from a merchant the amount of a transaction that is tax and gratuity as part of the transaction's authorization or settlement process may charge the merchant an interchange fee on the entire transaction because they don't know, right? They don't know how much they should not exempt from that transaction. C, a merchant that does not transmit the amount of a transaction that is tax and gratuity to those entities may submit tax documentation showing the tax and gratuity amount of the transaction to the bank or its designee not later than 180 days after transaction. So this gives the merchant about 6 months to submit, some kind of tax documentation to the acquirer bank that this amount was tax gratuity, right? The bank card network issuer designee that receives documentation from a merchant shall not later than 30 days after receiving that documentation credit the merchant for the amount in interchange fees that were collected on the tax and gratuity amount of the transaction. So 6 months for the merchant, then the banking entities have 30 days from receipt to credit the merchant. 3, a merchant that submits this information, that is inaccurate. Let me read it all. A merchant that submits an amount of tax or gratuity of a transaction that is inaccurate shall provide those entities with the corrected amount not later than 30 days after the merchant receives notice that the amount was inaccurate. So this is separate from the 6-month thing, right? This is that the merchant becomes aware either through its own reconciliation process or because the bank says this does not look right, right? So the merchant's now aware that they should look into this, and they have 30 days to submit that corrected amount to the banking entity. If that amount, the corrected amount, is greater than what was reported by the merchant, the banking entity shall credit the merchant the difference in interchange fees between the that's a typo, between the amount. Forgive me for that. It's not misspelled, it's just I have an extra in there. Between the amount originally reported by the merchant and the corrected amount subsequently reported by the merchant. If it's less than so in other words, if the merchant submitted if the corrected amount instead of $100 and let's say the merchant submitted that our taxes and gratuities were actually $15, not $10, then the banking entity would have to credit the merchant that extra $5 in whatever interchange fees that would be. Does that make sense? If it was actually $5 instead of $10, it was less than what was reported, the merchant shall then credit the banking entities or any designee in interchange fees between the amount originally reported by the merchant and the corrected amount subsequently reported by the merchant. 4, it shall be unlawful for any issuer, payment card network, or acquirer bank or processor to alter or manipulate an interchange fee of a transaction in an effort to circumvent the effects of the section the bill is trying to prevent not retaliation, so to speak, but some kind of method that a bank or issuer could do to maybe make that money back. Penalties. Any issuer, payment card network, acquire bank, or processor found to have violated the section shall be liable for a civil penalty of $1,000 per transaction. Any merchant whose rights under the subchapter have been violated may maintain a civil action for damages or equitable relief, which you all now know a lot about, as provided for in the section, including attorney's fees, if any. A violation of the section shall be deemed a violation of section 2453 of this title. That's the Vermont Consumer Protection Act, which then calls the Attorney General to have enforcement and to begin civil investigations, those kinds of things, as we've recently talked about. And finally, subsection D is severability, which means that if any portion of this law, if it becomes law, is deemed unconstitutional or it's not, there's some kind of preemption with federal law, then the parts of the law that are not deemed preempted would still remain. This is not super required, but the sponsor asked that that be in there. Vermont law says, just so you all know, Vermont law has severability as innate. In other words, if any law in Vermont, if a part of the statute is deemed preempted, the rest of the law still stands. So you don't really need this, but the sponsor wanted it. So, and the effective date is July 1st, 2025.
All right, so these credit card companies, it's my understanding that they charge more to our smaller businesses, even though the transaction fees are the same. I mean, it's the same, doesn't make any difference. I don't know if this is a question, it's not. Well, except for the fact that I was wondering whether or not we could add something in there regarding that.
Want to get in? They have contracts. Do you want to get into the contract?
I mean, yes. Whether or not I should is probably a different conversation. I mean, it's something that. No, because I'll ask you, you have to pay to set up the service, correct? They don't just like, oh, well, you want credit card stuff, we'll let you do it. Or do they
Pay a monthly fee.
pay a monthly fee?
Okay, it depends.
It depends. It depends on what service you're using,
So-
because it could be a percentage fee if you're using something like Stripe or.
Yeah, so
Square.
let's just concentrate on the language.
Okay.
If you have questions on the language, and we can get into better understanding how the system works by others that will be testified. John?
My question has to do with the penalties portion. The previous section, sort of A and B, lays out a process by which irregularities are corrected. Then when does it go from, oops, you didn't pay the merchant enough, to being a penalty action? What's the threshold then for something to be a penalty? Like, do you not violate this when a violation is not resolved through section or portion C of page 496?
So it's a good question. You may remember in the data broker bill, we had the negligence standard that if a data broker is negligent,
Yeah,
right,
yeah.
when not removing the information, we don't have a standard here. We could set a standard. Some might argue that it would be strict liability, to where if you don't do the 30-day window, if you don't pay the merchant back within 30 days, you would have violated the statute. Others may argue it's negligence. If you sent it 32 days later instead of 30, but the 30th day landed on the day you were closed, like that would maybe not be negligent. So we could clarify that if the committee would want to. I think most bills like this, they don't state an intent. It's just negligence, and it's parties will be able to argue that you did violate this. It doesn't have to be intentionally, but you were negligent in your actions. Is that
Okay, so and it's just a reminder that what we're seeing is standard language, and it's and that could be determined if an action is brought. If someone says there should be a penalty, then they need to sort of
Right.
explain why that.
Yeah, and the bank, the whatever the issuer would have a lawyer and argue that we didn't violate it. Or if we did, it wasn't because of negligence, it was because of something else, right? So you let the court process play it out.
Other questions? Is there anything in this, Rick, that requires the processor, acquiring bank, whoever's providing the processing service to create a system that would separate all of these out? So that means that the processors can continue with the way they're doing business, and it's solely on the merchant to file every single transaction with the processor or the bank.
Right, so the language is, the merchant shall submit to the entity, right? The amount that is tax and gratuity. And if they don't have that point of sale system set up correctly, which I want to give a little bit of background to that too. If they don't have that set up, then they have this alternative method, tax documentation, which is not defined, right? So what does that look like? Is it a bunch of receipts? Is it a formal document that the merchant has their CPA complete? They would have the 180-day window to submit to the entity. So the burden would be on the merchant to submit that to the bank. I do want to
hear from the process from. We need to better understand, is there a system that exists that can do that?
So Illinois, just a little background here, Illinois passed a very similar law last year. It takes effect July 1st, 2025. It's in litigation. The Illinois Banking Association or Bankers Association, IBA, filed a suit, and a federal district court, so entry-level court, set an injunction, which you all now know what an injunction is. There was irreparable harm the court argued that if this were to take effect, it's complicated, but you have federal law, you have the National Banking Act, NBA, that does regulate in a lot of ways this stuff. And the banks argued that this federal law preempts this Illinois law, one thing, and the court agreed. And there was a practicality issue that you mentioned, Mr. Chair, about the system not having that capability and how's this going to work. And if national banks are preempted, how does a merchant know if that person's card is a national bank credit card or a state credit union credit? Like, there's no way of doing that easily. So long story short, it's currently under injunction. It probably won't take effect July 1st of this year. It could. Appeals court could overrule that order. But just so you all know, it is under litigation. And if you pass this bill as written, you could also see similar litigation.
There's nothing in here that. There's no language in here that requires processors to not change their fee structure if this went through, so that they could still capture the same amount of dollars that they would.
Subdivision 4 on page 5, it shall be unlawful for an issuer, payment card network, acquire, bank, or processor to alter or manipulate an interchange fee of a transaction in an effort to circumvent the effects of the section. So that might, that's a fear. Maybe we could beef that up a little bit. But I think that's the intent of that section or subdivision, is to prevent that from happening.
So if they already have a contract, there'd be new negotiations, but this would be a new requirement on the processor that they can't, but there's still a negotiation between processor, the bank, and the merchant.
Right, but I think what this bill would say is that you cannot change that fee solely because of this. You can't increase something to make up for the, and I don't know how much money we're talking about here. That's not a question for me to answer, but that would be the intent, is that they cannot circumvent this by doing something else, increasing something else.
You mentioned the state of Illinois. Is any of this language similar to the Illinois language?
Very similar.
Okay. And are there specific portions of this similar language that are the focus of the injunction or the action?
It's not even specific to, it's just the entire purpose here of requiring the national banks, which are governed under certain parts of federal law, to comply with this law, where there's probably likely federal law already governing this area. So again, it's a district court. They can be overruled. They get overruled all the time, but there's not a specific part of the bill that we could remove, right, to make it.
I see.
Yeah.
Is there anything in here that would prevent me as a company that sells steaks to charge $5 a steak with a $40 gratuity?
No. Like a required gratuity, like the business. Yeah, no, there's not.
Aren't they doing that up in Burlington with marijuana?
Really?
I mean, it's just an eBay thing for years. They would charge $1 for something and $50 for shipping because they only paid fees on the object, not the freight.
You could have some kind of circumvention language that applied to merchants. We have language applying to banks. I would have to think about that.
Other question for it? Great, thank you.
Yeah, you're welcome.
Doug is on. Steve? And Doug. Okay, great. Good morning, gentlemen.
Good morning.
Morning.
Thank you for joining us this morning.
Thank you for having me.
So if you could state your name and affiliation and tell us what you think about the bill.
Sure. Who do you want first?
Doug, I think we have you on the agenda first, so go ahead.
Okay, great. Well, thank you for having me, and I'm sorry I couldn't be there in person. But my name's Doug Cantor. I'm General Counsel for the National Association of Convenience Stores. Just to give you a sense of our industry, there are about 6,000 stores, convenience stores across Vermont, about 9,500 employees. It is overwhelmingly a small business industry. About 60% of the industry are single store operators. And collectively, just the stores in Vermont, by the way, collect over $800 million a year in taxes. So this is a lot of business they do with the state. I want to say I'm particularly pleased to get the chance to talk to you because Vermont has been a leader on these issues over time. Senator Peter Welch has led in Congress, helped pass regulation of debit card fees in 2010, and is co-sponsoring a bill to deal with some large picture problems with respect to credit card fees in the Congress right now. And every Vermont member of Congress voted for those debit card regulations. We're very pleased with how Vermont has led on this over time. I'd like to give you sort of the big picture problem and why this bill makes sense within that big picture problem. But let me start with a couple of excellent questions that came up in your discussion right now. First of all, Illinois and the litigation that's going on there. Illinois' law is scheduled to go into effect July 1. What the court's done in the bank's challenge there is only grant a preliminary injunction while the case is ongoing with respect to national banks. It has said there is no preemption and therefore no injunction with respect to Visa and MasterCard, which are not banks, with respect to state banks, with respect to any credit unions. So that bill, that law is moving forward, and it's moving forward in its completeness with respect to every single bank, including the national banks. And here's why. Visa and MasterCard control this system. In fact, the banks litigating against the law in Illinois had an expert submit a report to the court on March the 17th. I'd be happy to provide it to you if it's helpful, because their expert says, as long as Visa and MasterCard don't have an injunction against them complying with the law will work completely as intended, and no bank, state bank, credit union, national bank, will be able to collect the fees on the tax or gratuity amount of transactions. It is completely ready to go. And we agree with that. It's just that the folks lobbying against bills in other states, including the one in Vermont, keep saying the opposite, but their expert has admitted Visa and MasterCard control this system. As soon as they say, hey, we have to comply, don't collect the tax on tips or gratuity, it will happen. And I will tell you, if you take a look at the thousands and thousands of pages of rules that Visa and MasterCard impose that dictate every aspect of this, from the prices the banks charge, how they collect it, and how every credit card is run, just saying, hey, don't do it on the tips and gratuities is a tiny detail that is much less complicated than the things they do every single day, which are incredibly complicated. And let me take a step back. What we have right now is an ongoing antitrust competition policy problem. The credit card market's broken because Visa and MasterCard dictate to all the banks across the nation that issue cards exactly what their prices are going to be to merchants. That's price fixing. It is the literal dictionary definition of a cartel. That's how they operate it. And that's why this bill will be effective, because they dictate every aspect of this. The banks hide behind them with respect to setting pricing. They're now, Visa and MasterCard are trying to hide behind the banks in the litigation in Illinois, but it's not going to work, and their own experts admitted that it's not going to work. They set then, Visa and MasterCard do a series of rules that try to insulate all of these prices from anybody knowing about them or from normal market forces. They say if a merchant or a restaurant wants to take any card, they have to take all of them, no matter how expensive. They put restrictions on how merchants can price their products to consumers and how they can or can't show what these fees are doing. The list goes on and on and on. They set all the security standards. The truth of the matter is that because they do that, all of us pay these fees. The average is now nearly $1,200 a year for the average American family in all of these fees. That's huge friction on the economy. It's a huge amount of money we shouldn't be paying. And by the way, those fees just for Visa and MasterCard credit cards are up 80% just since 2020. 80%. It's a market that's out of control, and we have the highest rates in the entire world and the most fees in the entire world. According to the Federal Reserve, in fact, not only is it bad, it was pointed out earlier, or the question was asked about small businesses. Yes, small businesses pay far higher, just about double the rates big businesses pay. And that's based on Visa and MasterCard's schedules that they dictate to the bank. And low income and low credit scored Americans subsidize high income and high credit score Americans through the system to the tune of $15 billion a year. All of it is completely upside down, and it can't be justified. Frankly, it even hurts small banks. Small banks have higher costs per transaction than their larger competitors, but they're forced into the same set fees that Visa and MasterCard dictate, and therefore they lose margin to their bigger competitors all the time. That's part of why this market's so concentrated and the big banks dominate it. Now, look, I'm not asking you, and this bill doesn't ask you to solve all of those problems. A lot of that's up to Peter Welch. I have a lot of faith in him to deal with this. But you can, in this bill, deal with one of the most unfair and egregious pieces of this, and that is taking away money from the merchant that the merchant can't even keep, that they're legally obligated to give to the state on tax amounts or to their employees. And what happens is literally that money gets taken from them before they get it. And the merchant has to reach into their own pocket to make up the difference and pay the rest of the tax or the gratuity. Just the interchange fees on sales tax in Vermont is $14 million a year. It's a huge, huge number. And look, this can happen without any changes to the system we have today. Sales tax data is already part of the transaction. It's called level 2 data. Visa, in fact, not only gets this data, they have a service they used to call IntelliLink. They now call it Visa Cost, it's Visa Spend Clarity, sorry. They offer to sell the sales tax data back to the merchant. And when they do that, they say, hey, don't worry, you don't need any new hardware and you don't need any new software. And so when it's a revenue source for them, it's easy, no new hardware, no new software. When it can benefit the merchant, like if you pass this bill, they will come in and say, no, this is impossible. You will tank the entire system. They have no credibility on that point. They tell merchants you can do it and that it's easy. In fact, in Illinois, where they passed the bill last year, Cost Advisor is a processor. They're an agent of Fiserv, which is one of the biggest out there. They've said, yeah, we'll be ready July 1. We'll have a compliant system, no problem. When Visa's senior advisor to their CEO testified before Georgia's legislative committee on this last year, he was asked, well, can you do this? And he admitted, yeah, we can. We just don't see value in doing this, but we can do it. So it is very doable. The data is there. By the way, the tip data is also there, right? It's just the difference between what you first authorize and what the final amount is. That's in those transactions as well. And I would say it's an excellent question with respect to if there's a way to get around this. I would tell you that the definition that Legislative Council went through that makes clear the gratuity must be voluntary is a very strong protection there, right? If a merchant's going to try to game the system but leave that fee voluntary, they're going to risk a lot of their customers saying, well, yeah, I volunteer not to pay it this time. Too bad for you. So I do think there's some real protection against merchants gaming the system there. Look, even if you do this in, say, $100 transaction, the sales tax is maybe $6 or $7, the bank's still going to get all the money on $100, just not the extra fee on the $6 or $7. That will still make the fees in Vermont higher than they are anywhere else in the rest of the world. The banks will not be hurting if that's what they have to do. Frankly, there are states in the United States that don't have sales tax. Therefore, obviously, the fees aren't being collected on sales tax amounts. They still have credit cards. It still works just fine. So look, like I said, none of this is revolutionary. One last point I would note, because it sometimes comes up in this context, is that the credit card industry says, look, we have to cover all of the amount, including the tax or the tip, for fraud. And that's why you can't do this bill, and we need this for security and fraud protection. Here's why that's wrong. When there's fraud, merchants pay for it more than the banks do. The Federal Reserve tracks these numbers. The most recent numbers are, when there's fraud, merchants pay for 47% of it, banks pay for 33% of it, and the consumers end up with 19%. So if this was about fraud, merchants should be getting the money, not the other way around. The other thing to note, just to be clear, all of the fraud in the system, you're talking about 12 billion, maybe $13 billion a year. The total fees last year were $187 billion. How many times over do they have to charge merchants to deal with the fraud and security? It doesn't hold together. Look, I get it. They want the money. That much is clear. We understand. But right now, the system doesn't work well. It's anti-competitive. And it would be tremendously helpful for you to give merchants, especially small businesses that pay about twice as much, a break. And by the way, because these fees are a percentage of the transaction amount, or most of them are, there's a flat fee plus a percentage. The small businesses that pay a higher percentage will get more of a break from this bill because they're paying a higher percentage on the tip or on the gratuity, or on the tax amount, just like they are on the rest of the amount. So it's much more important, frankly, to the smaller businesses that I represent than the bigger businesses, although all of them can use a break. So I'll stop there. Happy to take any questions or speak to any aspect of this.
Questions? John?
Thank you, Mr. Cantor. You'd used describing Visa and MasterCard terms like price fixing. And so that's big term with a lot of implications. Can you sort of let me know what is their percent of that market that belongs to those two entities? How much of the swipe fee activity goes to either of those two?
So first, Visa and MasterCard have about 83% of the credit card market overall. So they dominate the market completely. Their fees are on top of these interchange fees that the banks collect, and are much less than what the banks collect. It's, of what merchants pay, probably about 80% of that are the bank's fee, the interchange fee. About 10 to 15% of it are what the networks, Visa and MasterCard, get. Now, they still do pretty well. Their profit margins are over 50% compared to retailer profit margins of about 3%. But yes, they're not getting as much as the banks are. They're adding their fees on top of that.
And for my clarity, we covered a lot of ground, which I really appreciate. There's an element earlier in your testimony about how the Illinois situation is right now and how it impacts credit unions, et cetera. Could you just one more time give me that brief breakdown?
Yeah, absolutely. So the court has not issued a final ruling. They've issued a preliminary ruling based on freezing some of things in place while the litigation happens. And there are still briefs being submitted later this month in the case. But what they've said is, while the case goes on, they are going to have an injunction where the national banks don't have to comply with the law. But they said state banks and all credit unions and Visa and MasterCard do have to comply with the law, because the only question here is there's the National Bank Act, which counsel cited, and whether that creates preemption. And so my point here, and it's the same point made by the banking industry's expert in the case, is as long as Visa and MasterCard are subject to the law, which the court has said, at least as a preliminary matter, they are, every single bank will have to comply with this because they comply with all of Visa and MasterCard's rules as they set them every day.
Yeah, thanks for your testimony. Can you remind me, it's been a while, you were alleging that there were some antitrust violations, and I assume you're talking about federal law, maybe state law. Can you remind me which provisions, and there's sort of FTC, I think, authority as well. Can you bring me up a little to date in terms of what specific allegations you're thinking about?
Yes, so there are allegations under the Sherman Antitrust Act, Section 1 for price fixing, as well as under the Clayton Act for the way they set the rules and organize the banks. So there's multiple ongoing litigations in federal court in New York around those that have been going on for 20 years on that. And the Department of Justice has sued Visa and MasterCard multiple times successfully for different individual specific rules that they had that violated the antitrust laws.
And have there been, 20 years, that sounds about right. Have there been any rulings on those kinds of issues with Sherman Antitrust Act and Clayton with respect to that might have relevance to this particular allegation?
Yeah, I mean, I would just say, so in those big cases in New York, the judge ruled against Visa and MasterCard on their summary judgment motions just last year and set trial dates for later this year. With respect to the Department of Justice, they had successful action in the early 2000s through the Second Circuit, and they just actually, DOJ filed a new suit against Visa just in September for what they do on debit cards. So that case is just getting started.
One final question. So can you tell me what the name of the case was, the summary judgment decision?
Yes, so it's a multi-district litigation. So it's in re payment card interchange fee. And there's more to it. I'll think of the rest. It's MDL 1720. I'll get you the whole thing. I promise. I'll follow up.
Yeah, that'd be super. Thank you.
So what we've seen a lot in my region, small businesses charging those fees back to the consumer, right? So pay cash, it's this rate, pay with the card, you pay extra. How does that play into this? And also, would it make sense to not get an extra charge on the charge that you're requiring the consumer to pay instead of the business, right?
Yeah, so it's an excellent point is when they do charge, add that on to the consumer, Visa, MasterCard, and the banks take an extra cut of that. They get more fees for that surcharge amount. It's so there's sort of a dog chasing its tail aspect to this, unfortunately. You know, most businesses, and I'd urge you to talk to them, they hate doing that because their customers get upset with them. And so for many, many years, you really didn't see that happen for exactly that reasons. Customers would get upset and they'd exercise their right to go down the street, shop with somebody else. But that 80% increase just over the past 4 years has really made a lot of, frankly, restaurants in particular, but stores too, desperate enough that they're doing that and trying to make the best of a really, really difficult situation. So we do hear that a lot from our members who feel like they're at the end of their rope and don't know what else to do except to add an extra amount onto the charge.
You mentioned that Visa and MasterCard made up 83% of the market, and I assume American Express makes up the rest of it.
Discover has 2 or 3%, but yeah.
And there's a bunch of little smaller ones like Diners Club and.
Yeah. That was the original one, wasn't it?
Yes, it was.
Anybody want to hear how much they made last year?
Yes.
This is a press release from Bernie Sanders. Visa made $67.5 billion in profits. MasterCard made $44.3 billion in profits. American Express made $33.8 billion in profits. CEOs got paid pretty well, $140 million for Visa, and $77 million for MasterCard, and $157 million for American Express. I don't think they're doing too bad.
Yeah, as I noted, and this came out at the Senate Judiciary Committee hearing in November, Visa and MasterCard's profits are both over 50%. Retailers' profit margins average about 3%. And banks, by the way, are the highest of any industry average at 30%.
I do apologize. You know what? I'm thinking That might be the past 5 years that I just gave you for information. Might be a little off. I should have read the entire thing.
John?
Cantor, do you read it that in section 2A of the bill says a merchant shall transmit the amount of a transaction that's tax and gratuity? I was wondering, in your reading, is this therefore a thing that all merchants must do, or is this something that some merchants can opt into doing, or they can forego participation in this?
Yeah, I read it as optional. In other words, if they don't transmit it, then obviously that part doesn't have to be excluded from what the fees are charged on. But they do have the option instead of submitting the data up to 180 days later. There's a lot of pieces of this that get reconciled long after the transaction. All the fraud I noted in where merchants are charged back for the fraud amount happens afterward up to months later. And so there is that back end reconciliation. So merchants could, rather than transmitting it at the time of transaction, they could submit their tax documentation or tip documentation, which are highly regulated, right? I mean, they have to be sure that's correct when they submit it to the state, or there's serious penalties for them. So we have a lot of confidence that documentation is there. And there again, the merchant has the option. If they don't submit it, they don't get a reimbursement.
Questions? So Doug, just so you know, and everybody else knows, I own a convenience store. And I think in 2009 or 2010, I pushed for Vermont's law on requiring up to $10 for debit and credit cards. It's similar law to what Senator Welch put in just for debit cards on a federal level. So I'm kind of versed in this, and I actually have a system that charges the customer back, and I've had it for 4 years, and I get very little pushback. And I think that's because I provide a good service to my customers and a good cash price, where they're happy with getting a better discount on their gas and other things. So I think there are things that merchants can do to overcome those fees and still give their customers a good deal. But one thing that I worry about in looking at this is there's no requirement for the processor to put a system in place. And so if they choose not to, then it's on the merchant for every single transaction to have to provide that to the processor. And so I'm not sure that that's a good deal for the retailer.
So yeah, what I would tell you is that data is already there. It's in the Track 2 data on your card when you do the transaction right now.
But if your systems, if you're not an integrated system with your cash register, I'm not integrated. So when I swipe the card, I'm putting the total amount in. How do they know what's tax and what's not?
Yep. And if you're not integrated that way, you would submit up to 180 days later and say, here's what our tax amounts were to get a reimbursement later. And that too wouldn't need a new system because you're submitting documentation of that to the state.
Seems like that's a pretty heavy burden to put on a retailer.
That's, I mean, I see if you or others don't think it's worth it, you don't have to do it.
And I guess I would disagree with you on that section because it says that a merchant shall. And if we want it to be optional, then I think we've had to change that word to a may.
I'm certainly don't have a problem with that. That's a Ledge Council question. I read it as a may, really, given the option, but it's a fair point.
Rick Sagel, Ledge Council. Yeah, so the reason I use shall is the burden is really on the processors, banks, and their defense would be that the merchant never sent us this information. So the language says, well, the merchant shall do this, right? So it is opt-in. There's no penalty for the bank processor if the merchant never does anything, nor is there a penalty to the merchant if they never do anything. So in my view, shall is clear that if the merchant wants to enforce its right, it shall do this, but I can entertain, a different way to word it.
Okay, any other questions for Doug? Hey, Doug, thank you.
Thank you.
Steve?
Yeah, hi. I'm Steve Rauschenberger. I work for the Electronic Payment Coalition. I apologize that I'm not in a necktie and a shirt. I just got off an airplane from Texas. I was down in Austin discussing very similar legislation. So it's my pleasure anyway to join you by Zoom. Someday I hope to come to the Capitol. Vermont's beautiful. So thanks for letting me talk a little bit about this bill. If you think about it for a minute, if you wanted to design a perfect system to help people do transactions, it would be paid for by the private sector. No government money, unlike the check system or the cash system. It would be open to all. So any merchant that registered with their state, any merchant worldwide that was on the internet, any bank that wanted to join, any small credit union would be available to avail themselves of this system. It would have more than 10,000 banks worldwide participating in it, so that a credit card or a debit card from Frankfurt could be used in any place in Vermont. It would have over 400 competing processors in the United States who work with retailers to provide systems to access the system. It would have millions of retailers worldwide participating. More than 90% of Americans might be interested in being part of this system, participating either as debit card holders or credit card holders. And that system would cost less than 3.5% of a transaction, depending upon where it takes place and what the attributes of the transaction are. That's the system you have today. I'm a former retailer myself. I was 20 years in the furniture business. I was very excited a long time ago when we first had access to MasterCard and Visa, because it ended us having to do installment contract loans to help people buy dining room sets or bedroom sets. So there's a lot of utility and a lot of value in this system. It provides merchants ticket lift. It provides fast settlement. It provides better security because they're not handling large amounts of cash. It provides many benefits to consumers. Consumers love their credit card system, their debit card system. So, this is I love toll roads. I like toll roads because they're plowed. I like them because they're maintained. I like them because they're patrolled, but I don't like to pay the toll. I understand why merchants are frustrated with paying for the electronic payment system. But you have to understand, this system actually costs less to operate than cash business for most businesses. By the time you make cash drawers and manage cash drawers and cash out cash drawers, deal with change error and employee theft and other issues involving cash is no more efficient than the current electronic payment system. If you've noticed, airlines have gotten out of the cash business. They no longer have cash drawer with every reservation. It's all electronic. McDonald's encourages the use of payment cards through their drive-through because it speeds up the transaction more than 2.5 times. This is the system that serves us well. It's the envy of the rest of the world. The Europeans have tried for years to build their own payment system, and they actually practically can't. So this is a system we ought to be aware of and understand. The debit portion of this system, which is about a third of the transactions that go through the system, is already rate capped by the federal government and is pretty efficient and pretty inexpensive. We don't hear a lot of complaints about that. On the credit card side, where the interchange is higher, these are unsecured loans that the banks are processing. They have to deal not only with fraud, they have to deal with default, and they have to deal with account maintenance. I mean, these are loans that the banks are making. I think it was just recently reported the default rate on the current credit cards is running about 4%. So, when we're talking about this, we're talking about a system that's not free, that provides a lot of value, and that works pretty well. So if we start from that, we have to decide, do we really want to, on a state-by-state basis, begin to try to re-engineer a global payment system? The idea that this system could track tips and audit them and report to 10,000 worldwide banks or audit sales tax amounts appropriately without a lot of expense is just not very reasonable. The people talked about the Visa product that was available for a while. That was a reporting system that was not audited. So, if a corporate cardholder wanted to know what his employees were spending on the road, some of the participants and they would do level 2 data, which is post-transaction data, to give reports to the corporate office. That's not the same as having the worldwide system accommodate separate fields to deal with taxes and gratuities in an individual state. When the system went from the stripe to the chip, it was almost a 10-year process. And in the United States, we only still have 90% penetration of chip cards. So, anybody saying that this is easy to do and you can push this out like an update on the Apple Card system is simply wrong. That's what the judge found in the Illinois case, and the Office of the Comptroller of the Currency weighed in very unusually with a friend of the court briefing, saying that this was disruptive to the world payment system and was not in the best interest. So we've got a court case in Illinois that looks like it's going to prohibit states regulating national banks in their collection of fees. I mean, that's what the National Banking Act says states can't. And the question of whether it applies to MasterCard and Visa is still before the court because the argument is that MasterCard, Visa, and the processors are instrumentalities of the national banks in collecting their interchange. We believe we're going to prevail on that point as well. The Attorney General in the state of Illinois has already said he doesn't intend to enforce the law beginning the 1st of July because he doesn't think he can enforce it except on Illinois chartered banks and credit unions. And what's happening in Illinois, frankly, is those banks and those state chartered banks and credit unions are looking at changing their charters, which is, I'm sure, not what anybody intended. So we all want to help retailers. We'd all like to be fair to tipped workers. But I guess what we would suggest is this is not the right approach. Currently, a retailer controls their own pricing. They have the ability to surcharge in most states and probably in Vermont. They can offer cash discounts. They can encourage the use of debit cards, which have much lower interchange. They can choose to, reward people for using cash, or they can opt out of the payment system. So, retailers have choices. We should just keep that in mind. It's not as if we've forced them into a system where they have no other opportunities. They choose this system because it increases their business. If they're an online retailer, they wouldn't have a business in many cases if it wasn't for the utility and the value that the electronic payment system offers them. So this is a system that works pretty well. When you look at Illinois, when you eliminate the national banks, you're now down to 7 or 8% of the transactions that take place in Illinois. So in Vermont, this bill is very, very similar to the Illinois one. If this were to be enjoined, as I think it probably would, as the Illinois bill has, you'd only be penalizing state chartered Vermont banks and state and probably credit unions. We don't know whether they're going to be nationally preempted or not. If this bill were to prevail, the issuers would have some choices. You can prohibit them charging interchange on sales tax or tips, perhaps, and you can certainly do it for in-state banks, but you can't force a card issuer to accept the transaction. So issuers of cards would have to decide in your jurisdiction in Vermont or in Illinois, do we do enough volume that we want to put up with the risks of doing business in the state where they're reducing our earnings on our transactions. So you might have some international banks choose not to participate in the market. You also could risk some banks saying, we'll continue to participate, but we're going to tell all our merchants that we will only accept the merchandise portion of a transaction on our system. We're not going to allow tips or tax to be put on the system. The logic there would be their general counsel would say $1,000 per incident penalty when we're doing 10,000 transactions a day across the country is too much risk for us to take, based on our capitalization. Why should we incur that risk and carry the additional unsecured loan amount without any kind of reimbursement? So merchandise only, and the merchant will have to settle their tax or their tip in cash or check or Bitcoin or whatever they choose. The third possibility is some kind of multi-swipe, multi-entry system, where perhaps the processors could come up with a pretty quick system that would allow you to, put the chip in once for the merchandise, take it out, put the chip in again and code differently for the tax amount or for the tip amount, so that they could be segregated at the time they were processed into the system. Post-transaction reconciliation doesn't really work for a system that almost instantaneously transmits and transfers the money between the parties. That's why the 180-day rule for submission doesn't make any sense. When a tourist is in Vermont from Great Britain or from France and are transacting with their card in June, you're saying that all the way up to December, their bank could be assessed, 17 cents for the interchange on a sales tax transaction that took place on July 2nd. The worldwide system with fast reconciliation and the speed that it delivers and the value it delivers just wouldn't work very well with 180-day reconciliation. Not saying that any of these things are impossible. You can build an elevator to the moon with enough money and enough engineering. The question is this the right way to help small merchants? And we would just say, we want to be helpful to small merchants. We're proud of the system we operate. We think it operates well for consumers in Vermont and across the country. We think the majority of Vermont retailers are satisfied with the system, although nobody likes to pay their fees. And we would respectfully ask you, the Vermont legislature, to not act on this until at least the federal court, completes its review of the Illinois law, so that you have some kind of thoughtful guidance about the effect on the international global payment system.
So thank you, Mr. Rauschenberger. One of the entities you mentioned, I think, was the Office of the Comptroller of the Currency, and that's a federal entity in the Department of Treasury. So would the OCC's concerns be about federal banking law and limited to that?
Well, what they spoke to, and we can get you the brief, it's, I think, about 8 or 9 pages. It's not that long to read. They were concerned about its effect on U.S. commerce and the global payment system, that it was disruptive and expensive to try to accommodate a state-by-state approach that Illinois listed, I think, 7 separate taxes that would have to be segregated out, as well as tipped amounts or gratuities, which were hard to define in their bill. So it was pretty complicated. So they spoke to the complications and its effect on the banking system. They didn't speak to preemption. The judge spoke to preemption.
Can you help me understand more? You mentioned that Visa and MasterCard would be instrumentalities, and I hadn't heard that before in their description. So which would mean that can you explain how that impacts what the banks, how they would be instrumentalities of banks?
Well, for example, you couldn't pass a law saying that national banks can't use computers, to prevent them from collecting their fees. You can't prohibit indirectly what you can't prohibit directly. MasterCard, Visa, and the processing system exist so that the banks can operate the global payment system. Because it's the banks that loan the money. It's the banks that have the deposit accounts where the debit comes from. It's the banks that issue the cards. So the processors and the networks, not just MasterCard and Visa, but there's 9 networks in the United States, operate to facilitate the collection of bank fees. And what the federal law says is states can't interdict a national bank's right to set prices and collect fees. So, I really respect Doug Cantor. He's a smart guy and he's an eloquent spokesman. I mean, when I got done, I was about ready to tear up my Visa card. But I would say I don't agree with him that the judge did not say that MasterCard and Visa were under the law. What the judge said is they're not automatically preempted under the National Banking Act. They have to decide whether Visa and MasterCard, the networks and the processors, are required for the banks to be able to exercise their power of collecting their fees. So that's what's before the court now, along with a request for summary judgment. I'm sorry, I'm not better at that. I'm a recovering accountant and furniture salesman, not a lawyer.
I appreciate that. I can see these are slippery fish.
Yeah.
You made a comment about the European Union and how it almost sounded, I've never been there, so I never used a credit card there. Their infrastructure there for credit card usage is less than the United States. And is that a product of the interchange fees being less, or is that a product of just the general mentality about debt over there?
Well, Europe's different in a couple of ways. Number one, their banking industry is very concentrated. You know, they do not have state chartered or they don't have small banks. They don't have credit unions to speak of. It's a big bank organized over there. Number two, since they capped the rates, they have very little marketing or promotion of credit. It's almost all a debit market. I would guess 75 to 80% debit only in Europe. Very little credit card utilization because there's no motivation for the banking industry to, extend credit because they can't make money processing it. The Europeans would like to build their own network and get off of the infrastructure they run on is essentially MasterCard, Visa, Discover, American Express. The American networks mostly dominate in Europe, and that kind of sort of rankles the Brussels folks in the European Union. They'd like their own system, but they simply don't have the scale, and because they've rate capped it, there's no innovation in their market. So that those are some of the factors. They also have substantially higher interest rates on the credit products they have, because since the banks can't break even on their interchange, they have to charge. They decide to charge higher interest rates on the carried balances. So that's kind of sort of how that's not exact, but if you rate cap a market, it distorts it and it just expresses itself in different ways. And for example, debit used to be almost 65% of the market in the United States before the Durbin Amendment capped debit interchange. And when it capped debit interchange, debit rewards went away. There was no reason for a bank to promote the use of debit because they couldn't break even on their interchange. They didn't want to promote that part of the business. So today it's almost reversed now. Credit is larger than debit in the United States because that's what that's what consumers are using.
Yeah.
So it's just like, I'm good.
Tony?
So let me see if I want to make sure I understand the way the system works here. So I have a merchant account. I negotiate with a financial institution to take my Visa, MasterCard, credit card transactions. Now they pay a percentage to Visa and MasterCard. Is that correct?
You're asking me? Yeah.
Yeah.
Okay. When you sign that merchant agreement, you decide, I want to take MasterCard, I want to take Visa, I want Discover, I want American Express, or I don't want them. Or you also decide, you put the terminals in. Are you going to do training for me? Are you going to do my website? Will you give me point of sale? So whatever you need as a business is what you negotiate with your processor. And when you're done, your processor will quote you what they call a merchant discount rate, a rate at which they will discount the transaction, and then they pay the rest of the system with the amount they discount. So, you might be 2.25, you might be 3.6, you might, if you're an internet retailer selling stuff that is really problematic with a lot of chargebacks, maybe you're 4.5%, 5%, merchant discount. But that rate varies by what the merchant requests, wants, needs, and the type of business you are. And then it'll vary a little bit based on the card that's presented.
All right. So could I negotiate an exemption, for example, with my merchant account or with my merchant carrier, the bank that I'm working with? Could I negotiate something that says, hey, I don't want to, don't charge me the fee for tips and for sales tax? Maybe someone like me, no big deal, but I'm talking, let's take like a Chili's, for example, or a Longhorn or one of these huge chains. Do they have the ability to do that?
Well, the large chains certainly have the ability. There's no requirement in the system to use the published default interchange rates or price caps or the schedules, however you want to refer to them. Some groups bilaterally negotiate with their processors or with banks. Costco is the easy example to think about. Costco only accepts a single card. It used to be American Express. They tossed American Express under the bus, and I think they're with Citibank now. So yeah, large users, large people in the system that bring lots of volume, and also have sophisticated processing and can do some of the work of the processor or whatever, do negotiate separate rates. There's no bar to anyone negotiating a rate. The reason that the schedules exist is when you have literally, I don't know, I'll get the number wrong. Let's say there's 30 million retailers participating in the system and 10,000 banks. You start thinking about how many permutations that is to have bilateral agreements between a store and the 40 banks that might be actively participating in your market. Now, you might, if there's a bank that dominates your area, maybe it's worth pursuing, but with so many different, people, and that's what the value of the system is, that it's open to all the institutions and open to all the cardholders. So in absence of a bilateral agreement or a separate contract, the Visa or MasterCard, depending on which network, price cap applies to the transaction. So when the transaction takes place, both the issuer and the merchant know what it'll clear at. They know what the price will be. They know what their discount will be.
Okay. So I guess my what I'm trying to get is, say I'm shopping for a person to process my Visa MasterCard. I could entertain two financial institutions, and one of those financial institutions is a selling point. Say, hey, tell you what, you do business with us, we'll exempt you from the fees for tips and for sales tax. Is that possible or legal?
It's possible, but because they would have a hard time auditing the amount of sales tax and tip, they would probably express that by offering a lower percentage rather than say, we won't charge you for gray sweatshirts, or we won't. I mean, the bank or the issuer that would negotiate with you wouldn't be interested in complex data to prove it up. They would want something simpler. So the institutions generally compete by lowering their percentage rate over the whole transaction, because to the network, they don't know whether you're buying a bass boat or whether you're buying a fishing rod or a boat trailer. All they know is the amount of the transaction that they're processing, and they're going to stand the risk for. So one of the problems with sales tax calculation is the system today doesn't want to know what you're buying. In order to calculate tax and to separate taxable from non-taxable items, and to be able to assure the Bank of Frankfurt or the Bank of Miami that the transaction's right, the processor would probably have to create a database and track what was in the shopping cart, at least to prove up where the transaction took place, what the tax law was in that jurisdiction, and what was bought, whether it was taxable or not. So, I mean, the percentage amounts are much easier to deal with in a numerical system. I mean, that's why I can do currency conversion very quickly and easily. What it isn't good at is it isn't good at looking in your shopping cart and saying, okay, you bought bread, that's not taxable. You've got laundry detergent, that is taxable. You got a 12-pack of beer that's taxable, plus there's an alcohol tax. So complex transactions that require the system to know what's in the shopping cart to audit it's friction to the system that we would like to avoid.
Thanks, Mr. Rauschenberg. I think you mentioned earlier that you believe there were significant costs, additional costs, if H 317 were enacted. And I'm wondering if there's any independent audit out there that would say, yeah, these are the additional costs, and here's how they would be allocated to the different parties, the merchant, the Visa or MasterCard or the bank or whatever. Is there something like that out there that is available?
There's a couple of things, and I bet your crack ledge staffer could probably find them. There were affidavits.
Well, I'd like to save them that short though.
I'll see if I can get them to you, but there were affidavits filed by processors in the Illinois case that spoke to what they thought their costs would be to try to comply with the law. Those are affidavits filed under oath, so we could try to get those for you. I don't have them myself, but there's also a study done on what it would cost to do similar changes which was the real-time sales tax concept, where the sales tax would have to be paid to the state of Massachusetts instantaneously. And there was a cost study done on that came up with some numbers. Logically, if a jurisdiction like Illinois or Vermont were to enact the law and it were to apply across the state without preemption, it would be the processors who would probably have to do most of the work, because they would have to develop a capture system and be able to have the data available for audit. So those processor fees would likely rise, or they would, they certainly aren't going to do it for free. Somebody would have to do the new software and build whatever hardware changes and set up the databases. So in the end, the merchant would probably pay higher processing costs. The banks, the issuing banks, aren't going to probably want to subsidize the manipulation of the system to reduce their own revenue. So they're probably not going to be enthusiastic about helping pay for it. So, I mean, logically, it's going to fall on the processors, I think, and we'll try to get you some cost data. There's a lot of numbers thrown around. They're not really credible without some data.
Yeah, I know, and that's my point, I guess. It would be helpful, I think, to quantify that among, there are a bunch of different parties here, to try to quantify what that additional amount would be and who among them would incur the costs. And it would be particularly important, for me anyway, if that was, if there was some data like that from an independent audit, as opposed to, lawyers hire expert witnesses for a purpose. So if there was an independent office audit, I think that would be particularly useful. Thank you.
Hi, thank you so much for your testimony. It's been very enlightening. I'm thinking about some of the new, more modern payment systems like Square or Stripe, that especially for retailers in states where certain items might be taxable and certain items might not be taxable, how they're able to kind of deal with those differences in items.
Well, the retail point of sale system in almost all retailers is very advanced and tracks. For example, if you go to a bar, many bars can track what what kind of beer you like. Whether you order nachos or your preferences. When you go to the grocery store, they can separate the green beans from their artichokes. Those point of sale systems don't directly connect into the banking system worldwide. And if you think about it, you can kind of figure out why. A grocery store where a teenager can change the price of lettuce by entering code numbers in their system can't be connected into the world banking system. So Toast and Square and lots of really good software systems that retailers use collect lots of data. So it's very true that retailers would have data on what you're purchasing, data on how much was sales tax, data on how much was tips if it was a restaurant. They have that data. The question is whether that data already exists in the payment system and what it would cost to make it an official field and part of 10,000 banks worldwide. So we're not arguing that the data doesn't exist. Retailers have, they use it for inventory control and lots of things. But those systems have to be, they have to be separated from the world payment system. Otherwise, there's never been a breach of the MasterCard, Visa, Discover, American Express system, and for good reason. It's very, very secure, and retail systems are designed to serve the retailer, not to. But I mean, you could key the data in. I mean, there's no question that it can be done. The question is whether it can be done in a cost-effective and beneficial way.
I don't have a question. I just have a statement. I heard you say that the processors have been working very hard to figure out how to keep making the same amount of money no matter what laws we change. I find that disheartening. I find that statements that countries that states are making are saying you're charging too much. You're putting an incredible burden on society today that can't really afford it. I'm wondering when you're going to hear that, and I'm wondering what the tipping point is going to be. And I'm just going to be watching for that, because as these laws go through different states, I think you're going to hear it over and over and over again, that this is no longer in balance, and something needs to be done. So I appreciate your testimony tremendously, and you giving us insight into what's happening behind the scenes on your end. So thank you.
The questions? Steve, thank you.
Thank you very much for the opportunity. It was wonderful. You guys are really patient and thoughtful.
Chris?
Good timing.
At least he kept the chair warm for me.
We like the hot seat.
It was enjoyable. Remember when we used to joke that it was actually wired? Okay, having fun? Good morning. For the record, Chris Delia, President of Vermont Bankers Association. I think you've just gotten an interesting counterpoint on the complexities of interchange, credit cards, and debit cards. I'm going to pull you back out of the weeds for the moment, because that's where I think the nature is to get right into the weeds and start to ask questions. Let's start with the fact that we're very mindful of where our merchant community, our retailers, our grocers, our restaurateurs are, because they're our customers. They're Joe Bergeron's credit union customers. And we've just come off a very, very difficult time for them with the pandemic, when we worked together to try and get them through those difficult times. So it's not lost on us, or me, let me put it that way, when I hear about the challenges they're facing. Full disclosure, my daughter and son-in-law run a store in our town, a small grocery store, no gas pumps, but small grocery store. And all of my daughters have worked in a very close friend's restaurant and still work in that restaurant, two of them. So we have some knowledge of this, and I often have conversations with them, especially when I'm in the store helping to unload a truck at 6 a.m. because they're short on staff. There are many pieces to this discussion, and that's what I want to focus on, because it's not just the questions that you're asking. Let me try and put closure on the Illinois piece. Motion for summary judgment was filed on March 17th. The state has until April 23rd to file their response. And then the plaintiff has until May 4th to file their response. One would think at some point the judge renders a decision, but it's not settled by any means. And the question of application to state chartered banks, state chartered credit unions, and the credit card companies is still very much up in the air. And that is something that concerns me if we move forward with legislation that is still
under litigation and the potential impacts of that to our state charters, banks and credit unions. And that would be something that you'd want to hear from my members, Joe members, but I think also from our Department of Financial Regulation. Because the concept of flipping charter, which was stated, is not something that's done lightly. There's serious considerations that go into that. But when you have a competitive disadvantage with nationally chartered institutions to state chartered institutions, that's a motivating factor to look at that. But the bottom line is the Illinois case is very much unsettled. This is a national movement in states to introduce this bill. It's happening all around the country. To my knowledge, Illinois is the only one that's passed it. Your colleagues in other states right now are struggling with these discussions. But again, to my knowledge, no other state has passed it. I will not speculate as to what the outcome will be in Illinois, but my guess is probably neither side's going to be happy with the outcome. It would not surprise me if it got appealed to a higher court and we're in this kind of holding pattern for some period of time. Given the many players and aspects of this, I want to share with you my idea of a list of issues that you need to get your arms around and minds around in order to make an informed decision. My commentary will not go into the weeds. You can ask me questions and I will do my best to respond, but I'm not going to get into the back and forth of what we just saw with our two previous witnesses who did very well. Recognizing who's around the table, for those who are not doing this on a daily basis, it's important to understand what is the transaction process? What makes up that system? Because it's just not the merchant and the customer. It's just not the merchant's bank and the customer's bank. There's parties in between. And if you think of a network that transaction is running over, in order to close it out, to ensure that the merchant gets their payment, to ensure that the payment comes out of the customer's account, there's a lot of moving parts to it. It's not just financial institutions that offer processing. There are many small processing companies out there that will compete for your business, for your pricing, et cetera. Just didn't want to leave people with the notion that it was just financial institutions who are actually doing the processing. So you need to know who the players are. You need to understand what the network is, and there's flow charts that can look like spaghetti. I don't want to say EB5 spaghetti that some of us saw years ago, but it's spaghetti that you need to understand how it works. And again, need to understand who the players are. You also need to understand what exactly is interchange and what the fees are. And I will readily admit, for the merchants, talking with my daughter and son-in-law, it's convoluted. If I show up with a straightforward debit card, it might be one percentage or pricing structure. Somebody comes up with a rewards card, it might be something different. Somebody has a MasterCard or a Visa, I should disclose they accept all. You have to understand what we're talking about as far as fee structures, your ability to negotiate, and where those portions of the fee go. You also have to understand it's a fee for service. The network designed, created, maintained in order to provide the services to the parties that are involved. That includes the taxing gratuity piece of it. Even if you say we don't want to charge the fee on it, you're still running a transaction over those rails. And that portion of it is the expectation is we're doing it for free. I know merchants don't like to hear it at times, but there are costs of doing business, whether it's the lights, whether it's the payroll, whether it's transaction fees and networks, et cetera. So again, understanding what the fees are and the services. I've talked about competition for pricing. Also understanding what are the costs. Yes, there's costs for maintaining the system. There's costs for the technology that the merchants have in your stores. There's upgrades to technology that are costs associated with that. While the bill doesn't state that a new network is required, there will be needed changes to the network because, as the chair alluded to, there's one number that's going through the system. That number doesn't split off what's tax, what's gratuity. And as one of the witnesses said, we don't know what you're buying. We see the number that's coming through the system. So understanding what the costs would be associated with this. Understanding what the benefits are to the parties involved. It's not just the benefits to financial institutions or processors. We would also need to understand what are the benefits to the merchants. Because when people weren't showing up at the door during the pandemic, if you had the online presence, you were able to make sales using credit cards and debit cards. People talk about fees and those fee categories on their financial statements increasing, in part because debit card and credit card use has increased dramatically. Prices have increased, so therefore you would pay higher fees because of your price structures that have increased. We see that today, and we've seen it over the last few years. So understanding what the benefits are, not just to, again, the parties intimate with the system, merchants, customers as well. Understanding what the fraud liability is. I think it's important to clarify that the liability to the merchant is when you have a dispute on a chargeback to the merchant. The fraud liability for credit cards and debit cards, if those cards are compromised, rests with the financial institutions. That is on our shoulders. If I were sitting out in the parking lot with technology that allowed me to capture the credit card and debit card transactions that were going through a store, and I used that credit card and debit card information in a nefarious way, those losses to the consumers are not going to go back to the merchants. It rests with the financial institutions to make those consumers whole. We're talking about refunds and credits. 180 days and is an open-ended liability that would rest with the financial institutions. The box of receipts, I would guess, is going to take more than 30 days to go through and feel comfortable that it's an accurate representation of what we should be doing. Will there be more cost to do that? I would think there'd be more cost to the merchants. But yes, there would be more cost to the financial institution just in personnel having to do those reconciliations. What's happening in other states, I think from the perspective of legislation, I've already mentioned that. Part of the problem here, and you recognize this in other conversations that you have, when you're dealing with issues that are brought before you, is what really needs to be dealt with at the federal level. The problem that you have here is one state, let me rephrase that. You have Illinois that's going through the court process. How does one state create a system that impacts a national and international payment system with multiple players? There would be changes in that system that merchants, customers, and others would experience. So it becomes very difficult when you're looking at one state in isolation. What is that impact out there in the broader market? Absolutely legitimate question of what financial institutions' decision-making would take place. Representative Granning, I hear loud and clear your concern about the statement that was made. I would come at that in a different way, and my members would come at that in a different way. But there would be decisions that would be made for financial institutions. I think it's also important to understand in Vermont what's taxed and not taxed. That's readily available on the tax department's website. There are many clothing goods out there that are not taxed at all. There are many food products that are not taxed. How are those distinctions made in a system that currently exists today? Because again, you're seeing one number come across from a transactional point of view. I also think you need to understand what are the federal and state regulations on gratuities. Your Department of Labor, I think, could share that information with you. It is my understanding, looking at the Department of Labor's website, that it is at the discretion of the restaurateur whether the gratuities, whether the interchange, if you will, should be deducted from the gratuities that go to the servers in that restaurant. But again, I would leave that to the Department of Labor, so you better understand how that plays out. I put all of this out on the table to say, do we like this bill? No, absolutely don't like the bill. Don't support the bill. But you need to look at these issues to really understand the decisions that you would make and the consequences of those decisions. I would think I'd also be remiss if I didn't say we're at April 4th. And this is a challenging issue that many people will want to sit in the witness chair to try and address at this stage of your legislative session. I'm not advocating for a study committee, which I supported in your other bill, which went very well yesterday, incentive finance. It got a very good reception. But this is not an easy bill to address. It's not an easy bill to put in place and think that the fixes will resolve the problems to people's satisfaction out there. So I'm happy to answer questions, and if I need to get into the weeds, but I thought I'd just kind of pull us back a little bit and give you a broader picture of what's all implicated here.
I'm confused.
Uh-oh.
So my confusion is about the POS systems and the card processors.
Sure.
Because there are a lot of these companies like Clover, Stripe,
Yes.
Square, and all of them that are both processors and POS.
Correct.
So it seems like the data is there, especially for when the merchant is in the process of putting in the items that they're going to sell, whether it's taxable or not taxable.
Yep.
So the fields are there, the data is there.
Mhm.
Where is it on the back end that all gets aggregated into just numbers?
Great question. I can't answer it, but can I share my experiences with those systems that you're talking about? So I was treasurer for a nonprofit for quite a few years, and the nonprofit would conduct a silent auction for fundraising. It also was a membership-based group, so we used Square, Stripe, and PayPal. And I had I won't say pleasure, but I had the responsibility of going into their systems every month to understand the funds that were being transmitted through their systems to us as the nonprofit. And it was set up so that there was an automatic transfer at the end of the month, so the funds were coming into our accounts. What you didn't see, let me rephrase that. What I saw was the amount, and if I get deeper into the system, the amount of the transaction fee that was being charged to us as the nonprofit. So for example, on a membership of $35, $34.10 was actually coming back to the nonprofit. And I could see that. But what I didn't see is the acknowledgement that it was for membership, it was to buy a ticket to an event, or it was for a silent auction piece. That data, from what I was looking at, did not exist. I was just seeing the money aspect of it. So I can't answer your question of at what point behind the scenes does that all transact, if you will. I also see on my bank's end for the nonprofit, I only saw the money coming in. I did not see the detail unless I went back to Square or I went back to Stripe to understand the $500 was all of these different transactions of people using that type of service to get a membership or, again, buy a ticket or something like that. I should also add, it'd be remiss if I didn't. I was here with the chairman when we did the surcharge bill and we did the minimum, the flexibility of merchants to say, I'm only going to take a credit card or debit card over a certain amount. That as I go around the state and again, working with a nonprofit or conducting transactions or seeing my own daughter's son-in-law's business is becoming more and more common practice. The nonprofit I mentioned charged 3% on the transaction because of the fee structures. Go across the street to DMV and conduct a transaction for licensing, renewal, registration, or whatever. There's 3%. It's becoming more and more of a common practice out there, not prohibited in the state of Vermont. There are many states that don't allow that at all, but it was one way at the time to address the concerns of interchange fees and how to give merchants some relief to deal with that. The final thing is, I know you and I have talked about cannabis, and this is not an area that we can serve the cannabis industry in because of the federal regulations that still exist. We can't run it across the payment system. That's all cash.
I have some questions, but I suspect we'd have other time later on for cost issues and things like that.
I suspect we probably won't take this up again for a while until we understand what's going on in Illinois. I don't think we're ready to subject Vermont to.
I'm still interested in, the additional costs and how those would be allocated at POP. And
I think if you talk with Chris,
Okay.
can book you up with
We
something.
can we can talk offline and give me your list of questions and I'll see what I can get for you.
Or did you want to weigh in at all? Or you
It's up by my letter.
It's on the
Yeah,
website.
Right.
have it? Yeah.
And, I had one thoughts on that, but, this issue affects credit unions and banks the same way. And although I might use different words, Chris and I are 99.9% agree on everything that he conveyed to you. Thank you.
And for the record,
Oh, yes, the record. Joe Bergeron, Association of Credit.
And I should say, I'm happy to talk with any member offline, not just Representative Olson. He doesn't get special treatment.
It's disappointing for Representative Olson.
I know, but there's a lot of history there.
Okay, lunchtime committee back at 1 o'clock, start delving deeper into S1